Well, I wouldn't be surprised to see the commodity upcycle taper off a little bit in the near term. I think we've enjoyed too much, I think it's too far too fast. So depending on the gentleman's time frame and the amount of leverage he's employing in his portfolio, I would suggest that the current upcycle may only have weeks. Uh, my belief, however, is that we are in the early stages of a fairly dramatic commodity supercycle. The only thing that would cause me to walk that back would be a broad-based economic recession. The truth is, David, that there are more than 8 billion of us on the planet. Humans being what humans, well, humans doing what humans do, we add to that number every day. And those people around the world want to live like you and I. The commodities boom has everything to do with a fairly recent, which is to say 40-year trend in human history, where we've done a reasonably good job of increasing the living standards of the poorest of the poor. When poor people get more money, and we've done a great job over the last 40 years making poor people less poor, the things that they want are physical. When you get more money, David, you buy a service or you buy some little gizmo from Apple that doesn't
Sure.
have any commodities in it. But when poor people get more money, they increase the calorie count in their family. Their method of locomotion goes from barefoot to sneakers to a bicycle to a 50cc motorcycle to a Toyota Hilux. They want stuff that's made of stuff. I would argue with you that most of the resource renaissance in the period 2000 to 2010 could be traced back to Deng Xiaoping saying to be rich is glorious, to urbanizing 450 million Chinese. And I think we're seeing that process occur around the world. Meanwhile, that increased demand is running into an industry that is underinvested in sustaining capital for 30 years. And I think the collision between the impact of underinvestment and an expanding market will be higher and probably sharply higher commodity prices. We can talk about precious metals later. I hold them in a separate category. I'm talking now about, conventional energy, oil and gas, copper, agricultural minerals, things like that.
In a recent discussion, seasoned investor Rick Rule outlines a compelling case for an impending commodity supercycle. With a population exceeding 8 billion and growing, coupled with rising living standards worldwide, demand for physical commodities is set to soar. Decades of underinvestment in resource exploration and production, notably in copper, have created a supply-demand imbalance poised to drive prices higher. Rule emphasizes the importance of understanding market structures, particularly in uranium, where a shift to term contracts signals greater stability and creditworthiness.
Well, copper comes immediately to mind. I mean, we have a lot of copper, and we will find a lot of copper, but we haven't invested for it. We haven't searched for it for 30 years. We haven't found much because we haven't looked very hard. And when we do find it, we often have extraordinary barriers to production. The first being social rents, taxes, regulation, royalties. The second being regulation. As an example, there's an amazing copper deposit called the Resolution Deposit in Arizona in the United States, in a wonderful location around a bunch of copper mines, roads, rail, power, workers trained at copper mining. That deposit is 1.5 billion tons of 1.5% copper, 3 times the average mine grade worldwide. And that deposit has been stuck in permitting for over 25 years. I understand that people have to have a say in resource development, but people are going to need to juxtapose this say with the price of all things made from things on a global basis. I think that the small modular reactor will make an important difference around the world, but I don't think it will for 10 years. We're working on that technology. Yes, it's efficacious. Yes, it works in the U.S. Navy. It powers submarines around the world. But the commercial application around SMRs, which I think will be gigantic, David, in 10 years, won't be felt for 10 years. In the near term, the first thing that moved the uranium market was, of course, as you and I talked about a year ago, the pace of Japanese restarts. That's done. The second thing is that the cure for low prices was low prices. When we had low prices, we knocked off a bunch of supply while demand stayed steady. The impact of SMRs, the impact of the broader utilization of uranium through economies around the world, led, of course, by China and India, but including Korea, Taiwan, United Arab Emirates. Uh, a higher uranium price, maybe not a higher uranium price from here, but a higher uranium price from the time that you and I first talked about it, was absolutely positively in the cards. I think, by the way, what's important for uranium speculators to understand now are not extraneous factors like the US political grandstanding around Russian uranium or even the spot price. I think the important thing to know about the uranium business is that the structure of the market has gone from a spot or overnight market to a term market, which means for the first time in my memory, in any commodity that I follow, both producers and consumers will be able to lock in with some certainty price and volume. That will make the uranium industry much more creditworthy and give it a much lower cost of capital. That's the important thing to focus on in the uranium trade.
Continuing the discussion, Rick shares his perspective on the enduring appeal of gold amidst economic uncertainty. Despite his own financial security, Rule expresses a preference for holding gold as a hedge against instability, advocating for a mindset that prioritizes peace of mind over wealth accumulation. When discussing the gold-to-silver ratio, Rule emphasizes that prices are influenced by more than just relative abundance, pointing to factors like production methods and utility. Regarding currency dynamics, he notes the US dollar's strength relative to other fiat currencies, but questions its long-term stability, especially in comparison to the Canadian dollar.
I can tell you about where there are so many variables around an exact price that I have no idea. What I can tell you is this. I'm an old guy, fat, rich. I feel better owning gold than not owning gold, despite the fact that I could reasonably self-insure against any economic circumstance. And things that allow me to sleep nights and stay calm are things that are of high interest to me. And I think that if more people thought like I did, there would be less angst and more happiness in the world. I've never really understood the importance of the gold to silver ratio other than as an easy rule of thumb. The prices are set not merely by relative supply, but rather by relative utility. It's important to note, too, that most silver isn't produced from silver mines. It's produced as a byproduct of mining other stuff like zinc and lead and copper. So I think it's important for the questioner to understand that there are a whole bunch of factors with regards to the disparity in price between gold and silver, other than merely their relative abundance in the Earth's crust. Well, gold has been doing well in currencies other than the US dollar for quite some time, as you know. What I like to quote when people ask me that question is a flight to quality. Now, I say that advisedly. I joke that the US dollar is the worst currency in the world, with the sole exception of every other currency. And I think what you're seeing is disintermediation from a whole range of currencies around the world, from the yen as a consequence of Japan Inc.'s balance sheet, to the ruble as a consequence of the fact that the Russians are spending more money than they're taking in, to the renminbi, to the euro. The US dollar is doing well only relative to other currencies. It's my own personal belief that the deterioration in the purchasing power of the US dollar for American citizens is much higher than that which is suggested by the CPI, which I don't believe is a cost of living index. So I don't think that the US dollar is doing objectively well in isolation. I think it's doing well compared to other fiat basket cases. I think if you're asking me the question, the US dollar relative to the Canadian dollar, I think the US dollar continues strong. American politics is insane until one views it in the Canadian lens. The idea that your budget will balance itself or that there's no business case for the export of Canadian energy around the world when all of your trading partners want it makes politics in my own country look sane. And politics in my country are not sane. So while the American dollar will be challenging for Americans, the American dollar will look like a safe haven for Canadians.
Today, we delved into the insights of veteran investor Rick Rule, who offered a nuanced perspective on the commodity market and currency dynamics. From the potential for a commodity supercycle driven by global demand to the evolving landscape of currency values, Rule's analysis provides valuable insights for investors navigating these complex markets. As we conclude, we invite you to reflect on these key points and share your thoughts in the comments below.